Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We got to get to one of the key bull market indicators. Ed Yardeni joins. Ed, what's the name of your dog?
Well, Max. Max is always likes to show up here and have a little snooze.
For those of you on radio, the Max indicator continues to see a bull market. Max is snoozing on the couch.
Max
Ed's
on the market.
Right shoulder. And because his head is closer to the armrest,
that's a
Yardeni bullish indicator.
Okay.
Paul, why don't you Max's signal, Paul, get us going.
Yeah, he's very mellow.
Ed, thanks so much for joining us here. Eventful Jackson Hole last week. Tom Keene and his team were out there reporting on that. What did you take away from Fed Chairman Jay Powell's speech?
Well, I think what was important and what the market sensed was that he didn't say something. He had earlier this year started saying that we are in no rush to lower interest rates, referring to the Federal Open Market Committee. And at Jackson Hole on Friday, he did not say we are in no rush to lower interest rates. He basically said, well, maybe we're ready to make some adjustments here. And the market heard that as Fed put is coming. And what was interesting is he also didn't mention that, oh, by the way, between now and the September 16th, 17th meeting, there'll be more economic indicators. And those indicators are very important. There'll be two inflation indicators and payroll employment, and they might change everybody's mind about what the Fed should do next.
Yeah, I mean, I think he suggested that maybe the labor dynamic of this economy is taking a little bit of precedence for the Fed vis-a-vis inflation. But boy, you can't discount inflation perking up because we had more tariffs announced today with the furniture. So how do you think about inflation?
Well, he himself said that tariff effects on inflation can be sort of a one-shot deal. Said the problem is if the tariff implementation isn't one shot and kind of gets spread over time, that could continue to create some inflationary pressures. I think what also is missing in the discussion here, and he didn't discuss it, is that there's some indications that services inflation, maybe if it's not heating up, it's certainly not cooling off. I think what tariffs have done, if they've stalled the progress on getting down to 2%, and now we're kind of stalled at 3% because durable goods inflation has come up, and that's clearly an indication of the tariffs.
Ed, one of the great triumphs of the Yardeni, and folks, I linked this with the great technical analyst Ralph Ancampora, is the belief in revenue growth in earnings. I mentioned nominal GDP, the animal spirit of the nation, Ed Yardeni, more at Jackson Hole than I have in 18, 20 years before. If we get an elevated nominal GDP through real growth or inflation, for a stock market, does it really matter which is pushing nominal GDP up? We just go, don't we?
Right. Yeah, revenues are revenues. The PE times E is done in nominal terms, and the E is in nominal terms. So that's correct. We look at revenues, and then we look at earnings, and the implication is profit margins. And what we see in the data is that the first and second quarter earnings were remarkably strong, much stronger than expected. There usually is a positive earnings surprise, but it was particularly strong in both quarters. And now, during the second quarter, we have earnings on the S&P 500 at an all-time record high. No wonder the stock market is at an all-time record high. Of course, it helps that the valuation multiple is elevated at 22. But I'm thinking the bull market continues here on earnings, and I think that earnings will continue to push stock prices higher.
Bottle that, folks, and whether you agree or disagree with Ed Yardeni, go to the beginning of that conversation where he's agnostic on why we have buoyant nominal GDP. Mm-hmm. This is sacrilege in the modern days, Paul, and I'm sorry, Dr. Yardeni is correct. Nominal gets everything going.
That's right.
Ed, so we did have pretty strong earnings here. How do you think about, are earnings strong enough to support this market going forward?
Well, I think so. Here's my arithmetic on that. I think by year end we could get to 6,600 on the S&P 500. That's not that far off, and I think we can get to 7,700 by the end of next year. And my assumption is that by the end of this year, when we're thinking about what earnings could be next year, we'll be looking at analysts talking about $300 per share. And then at the end of next year, I think they'll be talking about $350 per share. Multiply those by the current 22 multiple and valuation multiple, and you get 6,600 and 7,700.
The tech moment that we're in, Ed Yardeni, does that change the way any of us calculate our so-called terminal value? If we have a CFA 101 5-year view or 7-year study of terminal value, is the new terminal value out more just because we think we're going to grow so much?
Well, I think that if you just kind of take normal assumptions of what the economy can deliver and has delivered in the past, you get to 10,000 on the S&P 500 by the end of the decade. That's the end of 2029. And the assumption there is that earnings expectations get up to $400 a share. And again, that's all pretty straightforward, consistent with the kind of growth rate of 6, 7, 8% that we've seen in earnings over the years. And if we get better than that, the market could very well close even higher than that.
Ed, how concerned are you, if at all, about some of the concentration risk we see in this market? A lot of folks are saying it's just too concentrated here with some of those big tech names.
It doesn't bother me at all, other than the fact that I haven't been concentrated in my own portfolio like that. It's hard to be that concentrated. To own 30% of your portfolio in 7 stocks is not exactly diversification, but it is what it is. And the ETFs that reflect the S&P 500 obviously are in fact are in fact showing the concentration of 30% market capitalization accounted for by the 7 stocks. There's stock markets around the world that are very concentrated. They've been concentrated for years. And I think there's nothing terrible about what's happening here. And by the way, if the Fed, in fact, doesn't listen to me and goes ahead and lowers interest rates, then we'll continue to see the broadening in the market to mid caps.
Could you see Yardeni as a governor, vice chairman?
Sure.
It'd be too much. Folks, I use the famous Secunda interpolation calculator on the Bloomberg. Ed Yardeni said end of the decade, Paul.
Yeah.
10,000 SPX. Folks, are you ready? I've never done this before. I've never said this before. Paul, Dow 70,000. 70.
Yep.
70,000. End of the decade, Ed Yardeni.
We're at 45 right now. Hey, Ed, talk to us about just kind of where else in the marketplace that you find value here. Is that to the extent people are looking for, hey, I just need to find some decent value here. I don't need to chase the hottest thing out there. Are certain sectors out there that you like?
Well, I still do prefer the large caps over the mid caps, but I also pay attention to what the market's doing and respect what the market is saying. And clearly, there's a move here towards cheaper stocks. So therefore, people are looking at the small and mid cap sector. Within those, I would kind of focus on the sectors that we like in the large caps, which would be information technology, industrials, and financials. So I think you can look in that part of the market cap segment to find cheaper stocks. I mean, the S&P 500's at 22 forward PE. The large cap, the mid cap, and small caps are at 14, 15. They're certainly a lot cheaper. We're just kind of waiting for their earnings to improve. The problem I have with mid caps is they keep getting snapped up by the large caps. Every time you never get to own a Microsoft, because before it becomes a Microsoft, it gets snapped up by Microsoft. That leverages up its technologies.
How about in the fixed income space, Ed? How do you think about just the allocation of stocks and bonds these days?
Well, I think bonds are basically where they should be. I think we've normalized the bond yield where it was before the great financial crisis. So I'm thinking that the 10-year bond yield should, in fact, be about 4.5% plus minus 25 basis points. And we've been in that range really since the beginning of the year. And I think that's kind of settling down. So if you're a very conservative investor, I think you can buy yourself a 10-year treasury and feel fairly comfortable that if you have to sell it early, you're not going to take a hit.
Ed Yardeni on index funds. Paul and I were looking at the ownership of NVIDIA before, and of course it's hugely index fund based. I mean, in the old days of C.J. Lawrence at Yardeni, it was individual stocks. You actually know perhaps what you were buying. Right. Ed Yardeni and index funds. Is it made our thinking sloppy?
Well, it's, I have kind of a realistic view of things. And my motto on something like this is, it is what it is. The ETFs are here to stay. I think you can certainly argue that they've kind of mucked up valuation, because if somebody says, I want to be in the market, and all they do is jump into the S&P 500, they're contributing to the high valuation of the Magnificent Seven, because it's so concentrated. But it is still a market. There's still plenty of people who can trade it one way or the other. And so I think the market's still efficient.
Paul, get one more in here. Max needs his morning walk.
Exactly. Hey, talk to us about the U.S. dollar here. The Bloomberg Dollar Index is down still about 9% from its high earlier in the year. What do you make of that?
I think I'm getting the sense that I'm just one of the only bulls left on the dollar. Let's put it this way. I'm one of the only strategists looking at the dollar that isn't bearish. There's so much bearish talk about the dollar. And yet, when you look at the Treasury data on monthly net capital inflows, over the past 12 months through June, we had a record inflow into the U.S. equity market by foreigners. That's at a net basis of over $600 billion. When you look at all capital inflows, they were $1.7 trillion over the past 12 months. So foreigners didn't get that memo that you're supposed to be selling the dollar and buying the euro, but that's what somebody's been doing that, and I'm thinking that technically speaking, we're probably at the bottom of a channel that's still got an upward trend to it. So I'm not giving up on the dollar. I think it's still going to remain a vitally important currency.
Ed Yardeni, thank you so much. Just thrilled with your effort. For Ed Yardeni's important notes, go to Yardeni Research. We greatly appreciate it. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We are strong here at the end of August. Forget about the summer doldrums. Henrietta Treyz wanders in the door and joins us here for an extended conversation. Okay, I could go to 8 sources. There's what you do at Veda Partners. I look at Amy Walter summing it up at the Cook Political Report. The gerrymander uproar is about what will Latino voters do. Who's winning the high ground for 26 and 28 with Latino voters?
I don't know that there's a high ground to be won right now, but there definitely is a regret trade on the Trump side, and you're seeing a migration, which is very normal for any majority party to come back. So I wouldn't say that Democrats are winning per se, but Trump is not continuing to win.
Do you look at the multiple state gerrymander debate and say, I have a winner, or is it an unknown?
I think it has to be a permanent state of wartime. And I think that these gerrymandering, redistricting cases are going to be a constant source of what we see as long as the two parties remain as competitive as they are. And when you have margins that are this slim in the House, you kind of have to keep up with the Joneses. And so whatever Republicans do, Democrats are going to do, and vice versa.
Henrietta, it seemed like the market, at least, the equity markets, have put the trade concerns kind of in a rearview mirror. But then I see President Trump announcing a major tariff on furniture. So I forgot all about that sector stuff. That could be material. Talk to us about what's going on at the sector level, because I thought all this was in the rearview mirror.
Yeah, I think the whole street would like it to be in the rearview mirror, but I honestly, and I know this is a lot to say, I think the second half of this year is going to be more volatile on tariffs than the first half of this year. And that's because as soon as this week, if not in the next couple weeks, the federal Circuit Court of Appeals is going to rule on whether the president has the authority to maintain these IEEPA tariffs, which is where we're getting $2.7 trillion worth of revenue.
What happens?
Well, it's widely anticipated that the courts are going to side with the Court of International Trade, which determined unanimously that Trump does not have the authority to impose these tariffs. So what must happen thereafter is the president has to pivot to Section 232 and 301 tariffs, which is where the furniture announcement came from. So for clients, what I've said for the last couple of weeks now is watch to see if the administration starts to launch new investigations on a sector basis. And they launched 2 last week, wind turbines and furniture. And it's because the Department of Justice is aware that they're very likely to lose this case. And the entire IEEPA structure will be upended.
So is the simplistic phrase, it doesn't go to the Supreme Court?
It does.
It does.
It will. I mean, that's the expectation if they choose to take it up. Yes.
Which they will. I mean, the Trump and the administration, they're on a winning streak here. I mean, they've got tons of momentum, it just feels like. So why wouldn't they take everything to the Supreme Court?
They're certainly going to try. They're obviously telegraphing that this is going to be, the biggest disaster since the 1920s if they don't have this continued tariff authority, which is ironic because obviously that's the last time we had tariffs of this magnitude in the first place. But the administration is definitely prepared to go to the Supreme Court, and they're very likely to lose at the Court of Appeals. And it becomes, is this a constitutional legal case or is it more about politics? And that's where your winning sort of argument comes in.
So, I mean, I guess investors here, we should not get too complacent. Is that kind of what we're saying here?
No.
Because the stock market's setting all-time highs here. And it seems, again, the market seems to have discounted that risk here a little bit.
Well, I think the number one thing I'd say is that when Powell says we could see tariffs be a one and done kind of event, think about what's happening. We're getting de minimis changed for, I don't know, the 4th, 5th, 6th time this week. We're getting 50% tariffs put on India. Now we're having additional tariffs put on furniture. Those tariffs are going on countries that we already have 50% tariffs on, whether it's India, China, Vietnam. I mean, the sector analysts are the ones that are really going to struggle for the back half of this year.
What is Henrietta Treyz's inside story on the body language from a collective White House? The perception is it's all about President Trump. I get that. But are the cabinet members and the advisors, are they working as one?
I think it's everything everywhere all at once. If you are a cabinet secretary for defense or the IRS or Treasury or wherever, find an issue that you can seize on and blow it out of the water. Whatever you can do to draw attention to whatever your issue is of the day. We're looking for all news items, all headlines at all times.
Midterms, I don't know. It's a year away. What's the current thinking about midterms here?
Current thinking is basically the default to conventional wisdom, which is that on average, the majority party loses 24 seats in the House. And I think Democrats are more and more excited about the opportunities that they have in the United States Senate with Sherrod Brown in Ohio, with Tom Tillis dropping out in North Carolina, seeing Susan Collins in Maine. They launched a new candidate in the last couple of weeks. Everybody's excited, ready to get into the election. Probably be a pretty high turnout event.
So do you feel that the Senate's in play?
Barely.
Yeah.
I don't want to be too optimistic about it. I would anticipate that Republicans are still the majority next year.
And in the House?
I think the House should flip. Just statistically, they should flip by anywhere between 5 and 25 seats.
Take us back to Civics 101. What does that mean for the president?
That means indictments. That means all day, every day oversight, investigations, subpoenas for every cabinet secretary, every official. You'll usually see massive turnover in an administration in that scenario, but Trump's life gets very uncomfortable, which is obviously why they're trying so hard to redistrict Texas, for example.
Well, you're so savvy at this. And Paul's got 18 questions. I should cut in, but I am. Is he a lame duck the first Wednesday of November 2026?
Yeah, absolutely. If Democrats win the House, the second they're sworn in,
it's like over.
It's over. Yeah. But, in this administration, he's doing so much with tariffs and executive actions that even though he's already a lame duck president, this is already the last administration that he'll have, it's, guns blazing all the way, no shortage of activity. So
is there any sense that the Democratic Party needs just a fundamental redo to really challenge not just President Trump here, but maybe the President Trump supporters, the MAGA supporters, and just that branch of the Republican Party, which seems to be in such control of that party? Is there sense that the Democratic Party needs a complete rebrand?
Absolutely, and I think they're having that fight, and they keep launching new little trial balloons. Something's got to stick, but they're trying.
Henrietta Treyz with us with Veda Partners. Thrilled to have her in the studio here to get your last week of the summer started. Futures at -20. The VIX of 14 level pulls back 15.14, but there is a cadence in August, cadence to it right now. A lot of good economic data coming up this week. How's the mayor race? Is there a national interest in the mayor race of New York City? Mr. Mamdani had, I guess, trouble working the bar this weekend.
I saw that. I don't think I could bench 135. I'm pretty sure that's not what I trained for. But yeah, no, I think that there's a lot of interest because of the attention that it's captured in New York City and the number of, extremely high net worth, very involved social advocates in the finance world even that really want to see this race go in a different direction. When I go to client meetings, and I'll be doing that all week, we talk about it a lot. People feel very intently about it and making sure that there's some other direction. People get excited.
All right, it's September. I don't have to worry about my government shutting down soon. What's going on in Washington when the folks come back from their recess?
Yeah, I do think we have to worry about a shutdown. I'm at 25% odds that we shut down on October 1st. That's really high for me. I'm usually a fade that whole noise, and I'm at 5% ordinarily. But this year, to your exact point about Democrats not having a message, Chuck Schumer got steamrolled for not shutting the government down when he had the chance in the first quarter of this year. And I think this is the next best opportunity. It also serves to gum up the works for the majority party. So the minority generally likes to have really short-lived CRs. When we get back, we're going to debate something called the National Defense Authorization Act, which is roughly $930 billion of spending on defense, which will complicate, the Fed's nomination of Stephen Mirren. There's a lot that they need to do.
Go through the specifics of this again. If the Democrats are in the minority, they can affect a government shutdown?
Yes, exactly.
Explain that to our global audience.
Sure. So the Republican senators have 53 seats, and you need 60 votes to keep the government open. And it's usually this very contentious debate, and everybody hems and haws and fights about pork barrel spending and, individual military bases in their district. And you get a very protracted, long debate about how to fund the Department of Education or Justice or Commerce. And the minority party is in a position of power because they're going to need to deliver probably what will be 10 to 20 seats, especially on the House side. Hakeem Jeffries is going to be responsible for delivering the bulk of the votes for whatever government funding bill they pass.
But he doesn't want to do that, right, Paul?
Which is why you shut down.
But do I want to? Who gets the blame for shutdown there? Is it the majority party, or is it the Democrats who, in fact, did not deliver the votes?
Historically, the president takes the blame. The longest shutdown in history was under President Trump. He shut it down for 35 days in that war with Pelosi over Christmas. It's usually the Republican Party, just because they have been the ones who were willing to shut it down. Democrats generally believe that the government is here to do good, so they like to keep it open. But we'll see if that holds this time around.
Have you been in Washington for the National Guard? Do you have an anecdotal observation?
I have not seen it, not live. I hear a lot about it. My friends are, all there, but I haven't been there since it got launched. No.
Okay, you're on recess. That's what the Henrietta Treyz.
Henrietta, I mean, it just seems like the Trump administration's on a roll. I mean, any way you look at it, he's winning almost everywhere in every facet. Is that kind of the feeling?
Yeah, and Greg Vallier's note this morning, he's piercing. He says there's a complete underestimation of the support the nation is giving him for some of these topics. Is that true?
That is absolutely true. I mean, I live down in Louisiana. I was out in the marsh in Grand Isle all weekend. I mean, you see Trump flags everywhere you go. Trump flags for 2028. The support is very real. Even as they're paying the tariffs, even as prices remain high at grocery stores, they do not care.
Yep.
And all these opportunities to win are well translated.
This is a joy. Come back again when you're on recess. Henrietta Treyz with us, folks, with Veda Partners. Just love her work. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Yardeni Goldberg joins us now, head of U.S. rate strategy, TD Securities. First thing I did this morning, and it was mentioned repeatedly at Jackson Hole, the Japanese 30-year, 20-year gives way, price down, yield higher. The United Kingdom 30-year gilt, a new high, new recent high going back decades and decades, price down, yield up. Can the same thing happen here?
Yeah, I mean, certainly could. I mean, it's why you've got the U.S. Treasury talking about issuing a lot more at the front end. You know, they're not looking to issue a lot more 30 years. In fact, I'm surprised that Secretary Bessent hasn't pulled out that Trump card, which is basically threatening to decrease the size of 20 and 30-year auction sizes. That's something that they could undertake if they feel like supply and demand's out of balance, like it is in the UK and Japan, and those governments are already talking about issuing fewer long-end bonds.
So we heard Fed Chairman Jay Powell definitely go a little bit dovish last week. How do you think the Fed's going to proceed with their easing cycle? Is it 25 here, wait and see how the data is, another 25, wait and see how the data is?
Cautiously, I would say. It's interesting. This cutting cycle sort of breaks the mold of most cutting cycles. Usually it's, escalator up, elevator down on rates. Mm-hmm. This is quite the opposite. It's elevator up, escalator down. They're very cautiously cutting rates. I think they do it very, very gradually. TD, we're thinking September, October, December cuts, then switching to a quarterly pace. I think when they start to go, they want to go more than once. They know 125 basis point cut doesn't do much. But I think they're going to keep a very close eye on the data. If the data doesn't tell them that they should be cutting, they can pause, they can skip meetings. Right. This is going to be a strange one.
Is it in the market, or will there be a shock in bonds as this unfolds, like the shock we saw in equities on Friday?
Well, it's 85% price for September right now. The pricing for the rest of the year, there's about 35 basis points or so priced in. So call it 50-60% of each of September, October and December. Okay. The market knows that it doesn't know. And that pricing is going to get refined as we get closer. The problem is we're all looking at the same data prints over and over and over again. And every time we get a print, the market adjusts and then we move on to the next one.
If your scenario works out, will there be a shortage of longer dated paper?
I think we're far from that, to be quite honest. I think we're far from a shortage of long dated paper. I think that's why the Treasury's issuing in the front end. They view the demand as being much higher there. It'll bring rates down, but it'll, what's known as bull steepen the curve. It'll bring all rates lower, front end rates faster. The long end will simply lag. I don't think long end rates go higher, but I think they come down.
I have real trouble with this jargon, like I flunked it 3 times in the CFA exam. A bull steepener. In what way is that bull meaning good?
So all interest rates lower, but the front end really leading the way. So you'll have kind of 5-year and under rates really dropping down much faster because they're responding to Fed rate cuts. The long end will come down as well, just because of term structure of interest rates, but it'll come down at a much lower pace. So you'll still have longer dated rates relatively elevated.
I listened to that, Paul, and I still couldn't pass it on the exam.
I think I got it. As an equity guy, I think I got it. 10-year Treasury yielding 4.28%. What do you think that is at year end?
We're thinking 4% by year end. So we're a little bit lower, not too much. We've got 3 rate cuts penciled in, like I said. And that's the thing. Most of that will be in the very front end of the curve. So 5 years and under, I think that's where a lot of investors are hiding out at the moment. Nobody really wants to extend out into 20 and 30-year space. But there's been some dip buying. You saw the 20-year auction last week went off fairly well. There was a concern that nobody would want to take it. Now you're starting to see a little bit of dip buying depending on the valuations.
So the Fed, are they focusing more on the labor market at this point, and feeling like inflation's kind of in check, or is that how they're thinking about it?
That's really the shift at Jackson Hole. If you look at the minutes of the last meeting, which came out last week, and they were instantly dated because they thought the onus is really on the inflation data, and that was the risk. Powell's remarks at Jackson Hole basically said, well, now the labor market's at risk. Inflation is not quite as much of a risk as we thought. It is still very much a risk. Let's be frank. The Fed is not committing to anything. They're watching everything. But it's really on the data to dissuade them from cutting in September rather than persuading them to cut in September.
Boy, I don't know. I just see like all these tariffs, including just the furniture thing that came out of nowhere, at least for me. That kind of feels like inflation to me seems to be a real concern. And I'd be maybe sitting on the sidelines, but I guess the pressure is for them to do something.
Well, what really matters here is services inflation. We know goods inflation is going to be hit. We know, all these trade disruptions are going to hit that goods side. If that starts to translate into services, so your barber starts to increase the price of haircuts because the razors are more expensive, right? That would be troublesome because that really feeds through into the economy in unpredicted ways. They don't know yet. The next one is going to be a little bit hot, but we're expecting that to calm down a little bit over the next couple of months.
One final question. TD is Toronto Dominion. Yep. Wonderful, great seats at Maple Leaf Garden. It's the TD Arena, right?
Yeah.
The food is awesome. I gave a speech up there last year and went in, and the food is to die for. It's great. The Leafs lost. It's appropriate. Gennady, are Canadians buying less U.S. full faith and credit paper?
Interestingly enough, no. We did see foreign investors generally shedding U.S. holdings back in the April data. The data since then has basically shown you a full-blown rebound. No one's really, that Sell America trade that everyone was talking about for months and months, it's not really going on.
Interesting.
It is the Hedge America trade. That's what's happening right now.
That?
So you hedge the foreign exchange component of it. You still buy the assets, but you realize the dollar is probably going to continue to soften a little bit. And you hedge that dollar exposure.
Who's that kid, McCormick at TD Securities? I don't know. I mean, are you guys modeling a weak dollar?
We're thinking of a slightly weaker dollar. So about 3 to 5% lower by year end.
You're hedging out your trade.
Yep. Exactly.
That's too much thinking for Monday morning. Gennady, this has been brilliant. Seriously. Gennady Goldberg. He is with TD Securities, Toronto Dominion. Can't say enough about his work on full faith and credit. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Got some newspapers here with Lisa Mateo, Tom. I mean, it's been, people just want this. Forget about all the stuff we do. They want newspapers, Lisa Mateo.
And then stock movers, it's just too much. We have to talk to management.
Yep.
Continue. Newspapers, what do you got?
Let's go. This one's from Business Insider. Okay, so it's saying a Harvard professor, he's talking about how AI is doing more harm than good in education. So this was a really interesting read. His name is Alex Green, and he's telling Business Insider that it's undermining the relationship between teachers and students. And the reason why is because it's saying there's this loss of fundamental communication skills like knowledge and reasoning. Like you have some students complaining that they write this 20-page paper and then all they get back is like these tiny little comments and then a mediocre grade. And they're saying that teachers are using Chat GPT to review their 20-page paper.
Oh, it's not the other
and
way.
Get the comments. So that's one side. Then you have the other side too, where it says that, the students are losing communication skills. But he also points out another factor that AI could start hurting their career opportunities too. And he said it's frustrating for him because it's his job as a teacher to help them get jobs. So that's,
I don't know how this whole
it's a
AI
different
thing
world. It's crazy.
in education. I don't know how they're going to manage this.
I find it of immense value, but I see the kids, including various offspring I'm identified with. I'm sorry, they're just not working like we worked.
I guess the creative aspect of it, you kind of lose because you just type it in and say, hey, tell me how to do that too.
It's Friday. You got to read 3 chapters by Monday morning.
Yeah.
There will be a quiz, and that's gone.
Yeah.
I don't know. Yeah.
It's a different world. It is. Okay, this next one, I'm not sure if you've seen the movie, but a big milestone for an animated musical that was released by Netflix. Take a listen.
We're
that?
Demon Hunters, okay? Ken Faleo knows all the moves to the song, okay? So just in case you missed it, it's about this fictional female pop group. They're facing off against a rival boy band who are actually demons. So that's a concept behind it. It debuted on Netflix back in like June 20th, and it did so well that Netflix decided to release it this past Saturday and Sunday in theaters as a sing-along. Okay,
it was ginormous.
It was the box office in North America, if you can believe it. Variety says expected to gross up to $20 million over the weekend from that. And in case you missed it, the sing-along version is actually coming back to Netflix starting today. So they're really really
These guys know what they're
going
doing.
off of this.
Yeah.
What's it called, Kate?
K-pop Demon Hunters.
Okay. We'll do their music tomorrow.
But but the soundtrack topped Billboard and Spotify charts, and it's not a real group.
Now,
I mean,
what's the
thing.
demo here? Is it young kids? Is it teens?
It's young kids, I think.
Okay.
Teens. Yeah, like my sister said, her kids are into it.
Okay.
My daughter's not, but some are.
All right.
But it's
One more?
huge hit. Quick one. Okay. A lot of stories about the housing market, right? So this is a growing trend. More buyers are asking to stay overnight at a home before
creepy.
buying it. Yeah, like a sleepover. Okay,
Yep.
it's like a test drive. Okay, it could be a price for it. One buyer agreed to pay 2 months, $250,000 each month that he stayed, because it include the staff too, the cars that were on the property, that kind of thing.
Okay.
But some people just do an overnight for free, and they're saying that this is becoming like a real thing, that people want to start giving the house a
I
little
should have
test
done that
drive
down at
before
the
they do
Jersey
it.
Shore estate, because I'm very close to the train tracks.
See?
And it's not the sound of the train itself. It's the dude blowing the horn on the train.
So if you would have
Yes.
known that beforehand, okay, see, you learn these by staying in the house.
Lisa Mateo, thank you so much. That was a golden report.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.